how debits and credits work. Bookkeeping is considered a double entry method, which I'm sure some of you may have heard that terminology. Double entry simply means your debits equal the credits. The process is very simple once you get the concept of it, so don't overthink it. Essentially, debits must always equal credits. Now, what is a debit and credit? Again, debits equal credits. However, a debit can either increase or decrease a certain category, or credit can do the same thing. For learning purposes, we're going to show you a method where debits, they're on the left-hand side and credits are on the right-hand side. Now, to understand how debits and credits work, first we need to understand the difference between the accounting categories: assets, liabilities, income, capital, and expenses. Each of these fall into a different category, and a debit and a credit affects them differently. Now, stay with me because I'm about to simplify it for you. Again, we have our assets, liabilities, income, capital, and expenses. Or again, Alice kind of helps us remember categories, right? Assets, liabilities, income, capital, and expenses. Now, what is an asset? An asset essentially is just property you own. Could be your cash, checking account, equipment, vehicles, accounts receivable, homes, buildings, anything of that nature. Liabilities are an obligation owed, money you owe out, or an obligation to fulfill a contract. Some examples include a car note, a loan, work paid for already but you didn't perform it, or accounts payable. Income, money received and earned. Now, it depends on how it's received. A gift is not income, but essentially, income is money that you've earned. This includes investment activities as well. Capital, you'll also hear it called equity. This is an account that when you own a business, that you have your shareholders' equity, your distributions, and things of that nature, which we're not going to go too in depth with, as more than likely your accountant, your CPA, whoever prepares your taxes will create these accounts for you and keep them adjusted for you and balanced. Expenses, purchases for items and or services needed to operate the business. Perform some work, but it costs you money to purchase the supplies, or it costs you money to pay somebody to help you complete the task. Anything that you are paying out to complete the work performed, or anything for the business that you need, including any type of office supplies or anything of that nature. Essentially, expenses is money paid out. So here we are at our 5 different categories. Again, Alice: assets, liabilities, income, capital, and expenses. Now, debit's always going to be on the left-hand side, credits are on the right-hand side. Now, here is how debit and credit affects each one of these categories. In accounting, these are the only categories that you're going to see. You'll see sub-accounts underneath that, but we'll go through that later on in the courses. This is just a basic fundamental understanding. So when you receive money into your checking account is considered an asset. The debit will increase your asset and the credit will decrease it. If you paid out money from your checking account, a credit's going to decrease it. So say, for instance, you have a sale. You sold some sort of product for cash. So, of course, a debit, you're receiving the money for the product. So your debit's going to increase here, and a credit is going to increase your sales. In essence, our assets, our debit increases, our credit decreases. A liability, money that you owed out, a credit will increase it and debit will decrease it. Income, credit will increase it, a debit will decrease it. Capital, credit increases, debit decreases it. Expenses, A debit will increase, a credit will decrease. Essentially, a debit will only increase these two accounts, your assets and your expenses. Now let's go through some examples. We're just going to go through some basic examples and how to put this into effect. Again, debits must equal credits. The amount on the left must match the amount on the right. You have a $500 sale. You're going to increase your cash by $500 and increase your sale by $500. Now let's go through some examples. An example of receiving a payment on income. You provided a service or a product and you received cash. Let's say $1,000. How would you record this? Simply put, your checking account increased $1,000 and your sales, your services, your products increased as well. So it's going to be a credit of $1,000. Now that you have earned that $1,000, of course, it costs you money to perform the work or the product, whatever it is. Now, let's say it costs you $750 in job supplies to perform the job. What do you think that entry is going to look like? Our debit's now going to be our expense of the $750 because you just increased your expense by $750 and you had to pay out $750. So you decreased your checking account by $750. Now, these are just some simple journal entries, is what we call them, to report into our double entry bookkeeping method. However, most accounting software does apply this for you in the way that they're set up. It helps to have a basic fundamental understanding on how the debits and credits work. It just helps to have a basic understanding on how debits and credits work and how to break out the different categories. Here's another, this is a little bit more complex of a journal entry, and I see a lot of people have a misunderstanding of it. So I did want to throw this out here. I did want to show something, show this to you. So you purchase a car, you go to the dealership, the final price of the car is $25,000, and in order to finance it, they're requiring you to put $5,000 down. You finance the remaining balance of $20,000. Now, this can get a little confusing because the vehicle is considered an asset. And how do we record something like that? Well, what we would do is we would create our vehicle, which is an asset. We would debit that $25,000 for the total price of the vehicle. Now we're going to credit our checking account, which is also an asset, of $5,000 because we decreased our asset $5,000 when we issued the check and paid for the down payment. Now we've got a loan payable, which is a liability. So now we have to increase our liability because now we have a liability on the table of money that we owe out. The loan payable will be credited $20,000. Now you see how our vehicle's $25,000 and our two credits here equal $25,000. Simply put, debits must equal credits. Now another common area that I see people do is when they do purchase a car, this original journal entry isn't done correctly, and they just kind of put their car payments into vehicle expense account. That's not how you would do it. Now, you initially set up your loan payable here for $20,000. So when your car payment is made, your journal entry would look like this. We're going to decrease our loan payable, our liability, for $500, and also decrease our checking account for $500. Again, if we look at Alice, our assets and our expenses, a debit are the only thing that will increase those two accounts. So when we debit our liability account right here, then what happens is we're decreasing that loan payable. And when we credit our checking account, we're decreasing our assets. So this has just been basic, simple overview of how debits and credits work and what the different categories are in accounting. Now, be mindful that a lot of the accounting software, the way the entries are made, the way the accounting softwares operate, you're not going to be required to do journal entries like this, but it's just helpful to understand what these debits and credits and journal entries are so there's no confusion.
But I did feel like it was important to understand the difference in the categories because a lot of times when I'm doing cleanup in QuickBooks, I see people they have a hard time figuring out where they should categorize stuff. So I felt like it was a little important just to kind of touch bases on that.